That little app your insurance company wants you to download. The one that promises to lower your rate if you just let it watch how you drive. It might save you real money, or it might quietly do the opposite. Most people click accept without understanding which one is about to happen to them. Today, let's fix that. Welcome back to the Evertrust Insurance podcast. I'm Alfred Bazzari, owner of Evertrust Insurance here in Nashville, and as an independent agent, I'm here to give you the straight version. This is episode 13, and we're breaking down Telematics, those track your driving programs, so you know exactly what you're signing up for. Let's get into it. So, Telematics is just a fancy word for your insurance company measuring how you actually drive, and then pricing your policy partly on that, instead of only on things like your age, your zip code, and your record. It usually works one of two ways. Either a smartphone app or a small device that plugs into your car collects the data. And what's it looking at? Generally things like your hard braking, your fast acceleration, your speed, your total mileage, and the time of day you're on the road. Late night driving tends to count against you. There are really two flavors of these programs. One rewards how you drive smoothly, get a discount. The other is pay per mile, which is built around how much you drive. The fewer miles, the lower the cost. Now here's the part that matters. What it does to your bill. Most programs start you off with a small discount just for enrolling, a little thank you for signing up. Then, after a monitoring period of a few weeks or months, they calculate your real discount based on how you actually drove. And this is the catch nobody reads. With some carriers, the program can only help you. Worst case, you just don't earn the bigger discount. But with others, a rough driving score can actually raise your premium. Whether a surcharge is even allowed depends on the carrier and your state. So this is genuinely a read the fine print situation. The terms control what can happen, and they vary. Here's something else people don't expect. These programs don't always know it's you driving. If your teenager takes the car and slams the brakes, or the app dings you for handling your phone at a red light, that can land on your score. Some programs let you dispute trips, but you have to actually check. So, the honest summary is, Telematics can absolutely lower your rate. It is not automatically free money. So who actually wins with these programs? If you're a low-mileage driver, you work from home, you're retired, you just don't drive much. Pay per mile especially can be a strong fit. And if you're a genuinely smooth, defensive driver, a behavior-based program can reward that. Who should think twice? If you've got a long daily commute, you do a lot of late-night driving, or your car gets shared with newer drivers in the house, the math may not work in your favor, and in a program that allows surcharges, it could cost you. And one more thing I'd want you to weigh: privacy. These programs collect data about where and when you drive. For a lot of folks, that trade-off is worth the savings. Just go in knowing you're making it. Bottom line, Telematics rewards low mileage and smooth drivers, but it's not one size fits all, and track your driving doesn't always mean lower your rate. The smart move is to know your own driving before you opt in. Not sure if it's right for you? That's exactly what we do at Evertrust. We'll look at your situation honestly and tell you whether it's worth it. Call us at 615-719-3049 or visit evertrusttn.com. We serve our Nashville neighbors in English and Farsi. These episodes come from your questions. Drop yours in the comments, and it might be the next one. Like and subscribe so you don't miss it. I'm Alfred Bazzari. Drive safe, and I'll see you next episode.